Hi there, my name is Jason Ayers, CEO of the Croft Financial Group and a member of the Investment Review Committee. On behalf of the committee, thank you for taking the time to watch our Portfolio Manager's Brief for August 2020. Well, both Canadian and U.S. stock markets continued their recovery through the month of July and into early August, supported by the ongoing rebound in economic activity, as well as advances on multiple fronts with regards to a potential vaccine against the COVID-19 virus. Despite the ongoing social unrest and political divisiveness, domestically, the U.S. continues to lead the charge. While technology in general has been outperforming, much of the gains can be attributed to the S&P 500's 5 largest stocks, collectively known as FAMG, or more specifically, Facebook, Amazon, Apple, Microsoft, and Google. To draw comparisons, the S&P 500 closed out July in positive territory at plus 2.4% year to date. However, without FAMG, the S&P 500 would have been almost 8% lower. Nevertheless, they say the trend is your friend, and many investors are happier for it. As mentioned last month, it would not be unrealistic to expect some volatility and resistance with share prices of these big tech companies trading at such levels. As a group, these companies continue to face headwinds such as antitrust inquiries from U.S. lawmakers, the possibility of a corporate tax rate hike at the hands of a new Democratic administration, as well as increased day trading activity and short-term market speculation contributing to their daily volumes. The Canadian stock market continues to lag its U.S. counterparts year to date, with the TSX Composite Index still negative 3.3%. Since June, however, the index has closed the gap significantly as both materials, particularly gold, and information technology sectors performed well. With gold rallying so much so quickly, it's likely that we're going to see some price consolidation at these levels. However, low yields, a weak U.S. dollar, and an albeit better but still shaky macroeconomic outlook should bode well for the precious metal. As far as stocks in general, given the fiscal realities looming in the aftermath of COVID-19, the relaxed monetary policies of the Canadian, U.S., and other major central banks are likely to continue for the next few years, meaning that interest rates will remain low to support the ongoing recovery. This also means that bond markets will remain unattractive for the time being, forcing many investors into stocks to find real return. Last month, we referenced Q2 earnings as being a focus, and so far, many companies have beaten estimates and earnings growth expectations are improving, which supports the potential for continued, albeit modest upside for now. We've also seen COVID case numbers drop in many developed countries over the summer, which has helped with investor confidence. While many uncertainties lie ahead as we move towards colder temperatures, gatherings moving back indoors, and of course children going back to school, the markets are said to be forward-looking. Even with record-setting job losses and the U.S.'s ongoing struggle to flatten their curve, investors continue to stay focused on supporting the recovery, and with each day that passes, we learn more about the virus, advance closer to a medical solution, and eventually the other side of this pandemic. Now, there's also the upcoming U.S. elections to consider for potential market volatility. Over the last 10 years, history has shown that U.S. stock markets have traditionally stalled a few months ahead of an election, but have resumed their uptrend for at least the 12 months following. While there may be some concern for how a Democrat-led White House will impact corporate America, the economic recovery should continue, provided central banks remain accommodative and investors remain confident. To reinforce our expectations as outlined in our July brief, investors should expect some choppiness in the stock market over the next few months. But despite these short-term dips, the trend remains to the upside, and this market environment is ideal for active trading and investing. In closing, our portfolio managers will remain focused on regaining ground and adding to portfolio returns by taking advantage of any short-term weakness to add to positions, taking profits as they hit targets, and where applicable, taking advantage of uncertainty and the resulting heightened volatility by using increased option premiums to enhance cash flow. As always, please stay safe and healthy, and on behalf of the Croft Financial Group, thanks for watching.